username here, and I have another trade review, this one on Tesla from December 9th, 2022. It was a 0 DTE on my small account, and I did post a review on this in Discord, and it was just a little bit too much information. There was too much going on, too much confirmation. I was looking at too many different things at the same time, so it was hard to put on a graphic like I normally do. So I did put together a quick and dirty for the Discord, but since I went into such depth when I did my own review and it required so much more, I thought I would make another video and post it. So this is that video, and so I wanted to touch on one other thing because of how I traded this. So I am trading right now in my small account, just a cash account. About a week ago it was $1,000. Now it's like $2,100. And I'm trading that small account because I need to work on process over profits. I was getting too concerned in profits, and I was holding losers longer than I should have, and it was just a way for me to get back my discipline and work on it. I am a perfectionist, so I don't like to lose. So I don't even like to lose one trade. And I do have a pretty high win rate. My win rate's usually between, like on trades, just raw trades, usually between 70 and 85%. And my green days are usually in the 80s. Hanging on to one loser every once in a while, or two losers in a short period of time, when you hold on to them too long, it just absolutely destroys your profits. So I'm going back to the small account, work on process, work on making sure my entries are ideal so that I can have a tight stop loss, or at least I know what my stop loss is going to be. And, overall it'll just maximize my profits. So let's get on to the trade. So this is Discord. I actually posted an entry in the Bueller Buys Discord at 9:03 a.m. on Friday. And put in there, wouldn't be surprised to see more consolidation up this rising wedge / bear flag. However, it wouldn't take much for this to begin forming a bullish reversal, but it will need momentum to get past the 180, 181 support resistance range. So by that I meant we've got this rising wedge here. This is a 1 hour chart. So we've made a drop. This 180, 181 is a support resistance range. We caught support on this on the way up to all-time highs back in late 2020, early 2021. So this is the first time recently that we've actually gotten back down to these, and we've dipped below them in the past, and then we popped above, and now we're dipping below them again, and we're creating this rising wedge. So, So the foundation of my trading last year and a half, I've been in Bueller's Discord. So the foundation of everything I do is really the BB course. And one of the things he always says is plan for both directions. So you plan your up, you plan your down. So I've also added a third thing that he does say, but he doesn't build it into that little saying of plan both directions. But I also plan for sideways. One of the things that's really gotten me is the chop. So I actually watch out for three different things, and he actually does too. He's kind of got his zone in the middle where you don't do anything. You go calls above a certain range, you go puts below a certain range. So he does build it into his program, but I just I have to articulate it to myself so I remember there are three directions, and you don't want to trade the sideways. So what I was saying is we're really set up for a drop here. But given the meetings next week, we could go sideways. We could continue this rising wedge, just back and forth chop, and then either break up or break down into next week when we start having those meetings. Or we could have a really good push up, and it would be really nice to hold this area. We'd have to blow through this area of 180, 181, and then kind of like this, kind of like where we blew and then we rested upon it. If we blow through it, and then we can retest this and go for a higher move. That's basically what I was saying, is that those are the two directions. So that was at 9:03. So that basically outlines my trade plan. My trade plan is to see if we can blow past this area, or if we're going to drop this lower level here and go down. And at 10:11, so almost an hour into trading, Taking some scalps this morning, but Tesla is definitely basing here in this huge area. Careful if you're trying to trade this until it decides. So by huge area, I meant like this wide range here. So that's a really wide range. It's basically matches, it's basically half the move up since open. And this move up actually started at pre-market low. It pivoted. It hit pre-market low, bounced off pre-market low, and then shot straight up. So it's not unreasonable to have this range here where it's figuring things out. But to move sideways for this long tells you that the markets were also moving sideways. So there was no direction given, and the volume is a really weird pattern too. You don't usually have, in this 5-minute chart, you don't usually have your highest volume candle, your third candle. So that tells you there was a huge fight here, and it was a beautiful reversal pattern there, but it was a huge fight here instead of that first. Usually your first candle is going to be your highest volume. So basically saying, be careful. Be careful till it decides. 1019, getting tighter here, following lower trend line up so far, waiting for volume to help decide. So again, saying, we got lowering volume here in general, and basically saying, hey, we're no longer in this boxy area. We're starting to get a lower trend line. So this lower trend line is going to help us, and volume is what's going to help us decide. And at 1023, Tesla looking like she wants to decide here soon. Busting through and holding 180.50 would be great for the next move up. Scalps on the way if you get on in this pop, though. Careful, the market's moving sideways. So now I actually say the market's moving sideways. She's following the 9 on the 5 and the 10 minute. So let's actually flip over and look at that. So down here on this bottom left, I've got the 5-minute chart. So you can see that the 9 EMA, and I don't know, you can tell that I've got my charts all aligned with each other. So hopefully you can see where I'm at here. I'm down here in the bottom right. This is a 5-minute Tesla. So this is a 5-minute Tesla. This is a 10-minute Tesla next to it to the right. And then I've got VIX to the right of that. And then I got the futures next to those two, NQ, ES. But back here on both the 5 and the 10, you can see we're tracking the 9 EMA, and we're getting tight. And, if you look at a 5-minute candle, or a 5-minute chart, you can see that we do have this consolidation going here. All right, so let's go back to this. Looking like she wants to decide here. Following the 9 EMA and the 5 and the 10-minute chart. So additional continuing, we're above pre-market high. We didn't have much action here at prior day high or prior day close. We opened here at prior day close, and we really pushed up from there. And now we've got a really nice consolidation here. It's starting to consolidate from both sides. So down here we were getting higher lows, but we were still kind of boxy. Now we're starting to see, this consolidation come to a point here. So we're starting to see the candles get smaller and smaller while the volume's getting smaller and smaller. And let's see, 1028. So 5 minutes later, 10-minute chart, still holding trend lines and dojis for indecision. So basically what we're seeing here, this is an ideal place to do absolutely nothing and be ready for both sides. And the reason I say this is because we got a strong push up. Again, the second, even on the 10-minute, the second candle has more volume than the first. Then we have our first red candle has lower volume. So we have a really strong move down, and then halfway or better than halfway push up. And then the next candle has higher volume, and that's red. So that tells you, hey, sellers, right? But no, because it's a doji. It's long-legged doji. That's indecision. So that could just as easily be green, or I'd call that a white candle and white volume bar. What that tells you is there's a huge fight here. So you got a huge push up, you got an even stronger push up. Now you've got you've got some people fighting here, but then you've got a real battle in this middle one, and that battle in the middle one has got them exhausted a little bit, and that's when you start getting the lowering volume consolidation. The conviction in the move is people are going to be on the sidelines now. They're going to wait and see what happens. So that's when you start moving sideways with this indecision. And the whole reason I said that was because this is not the time to do anything. This is literally indecision. we need to do exactly what the major players are. When they fought here, now they're sitting it out. They're going to decide. They're going to decide when we see which way this moves. And 1042. Oh, I actually got into the trade. So now let's go back over and actually walk through the whole trade. And I want to walk it through. This is basically the, I don't know, the write-up I had for the Discord review. But you can see here on the 1 minute chart, and I do trade on the 1 minute chart. I enter and exit on the 1 minute chart. I manage, I have the 5 minute chart down here in the bottom and the 10 minute chart down here in the bottom. But I manage most of it from this screen so that I can watch VIX and NQ and ES. But on occasion I'll flip over to this and I will switch between 5 and 10 and 15. I might trade on the 15 if I got a longer play and I'm not 0 DTEs. Remember, this is Friday 0 DTEs, so 10 minutes I'm watching just for, to make sure that there's no retest that I can't handle here. I don't need a retest on 0 DTEs. But so let's talk a little bit about the pattern. So I'm going for a measured move on this. There's two ways to play this. One is just the scalp. You just scalp this move, and sometimes I'll scalp patterns, especially if it's not a strong pattern. In other words, if it's not a big, this is a fairly big pattern on a fairly big move. So my measured move here, it's this blue. I don't know how well you can see it over here, but you measure from the top of the very left-hand portion of the consolidation, and then that is the same distance you would apply to your breakup period, or your breakdown if it went down. So your breakup, you would apply that, and that is your measured move. So there's two ways to look at it. You can maximize your measured move, which in this case it actually did. It actually peaked up here, and it's really close to this next level that I have here too. Or you can go, which I've done recently, is go with like 85%, or if it's close to a psychological level or something like that. So earlier in the day, I'd run some scalps, and I had missed a scalp by a penny. Like on the peak, I missed it by a penny. My gain on that went from like 75%, and I was literally 1 penny off on my contract. Went from 75%, and I ended up getting out at 40%. I didn't get continuation. I didn't get a good bounce. It ended up reversing. And that's good. That my bad for doing that in a day that's effectively sideways. When I was trading that, it was back in here when ES and NQ are basically moving sideways off open. So my fault for that. But I guess that was my additional reason why I moved it back down here to 85%. This isn't for greed. This is for process. Process over profits right now. I'm trying to get the process nailed down so that, today I was in one contract at $125. I got out at $250, incidentally, right at this psychological 180, 150. It levels here. Every 50 cents is a little bit of a psychological level. So the 50 cents kind of is, the dollars are. But, this isn't a whole lot of money, but if you scale this up to 10 or 20 or 30 contracts, now you're talking a decent amount of money. And a great return, 100% return on that money too. So process now, profits later. You can scale into profits. So that's why I moved that down. But so let's look a little bit about why I got into this. I had multiple confirmations on this. And I'm going to tell you two of them that I see on the 1 minute chart. And then I'm going to walk into why I have the VIX and NQ and ES here, and why those were also further confirmation. So this 1 minute chart, I've got a consolidation here, which we showed in the Discord. And you can see on the 5 minute chart, it doesn't look as good, as clean here. But, we do have a consolidation here. We're riding the 9. Got a little bit of consolidation here. Definitely the volume. The volume tells us there's a consolidation. The volume is coming down. In fact, the 1 minute shows you really well. The volume comes down. Our lower trend line's coming up, and our upper trend line starts coming down. And so if we go, so we've got a consolidation here. It's giving us all the signs. and then we've got like a micro pattern in here. So here's a rectangle consolidation inside of the larger consolidation. So this we're getting a lot of big movement back and forth, and then it starts just kind of alternating red green red green red green, just going up and down and up and down and up and down. You see we get a wick every once in a while, but it's basically going sideways here, up and down in a rectangle. So the way you play a rectangular breakout is similar to any breakout. You've either got the initial breakout or you've got a breakout, retest, breakout. So this, when I was watching this basically go red, green. In fact, I can even scale into this or zoom into this. We're watching this go red, green, and stay within this box. And then we have lowering volume. We have a little bit of a pump here in these big candles. And then we have almost no volume in this candle right here. And it's a small candle. And it's in the upper half of this consolidation. So right here is where I was getting ready. I got my finger on the button right there. I'm like, hey, here we go. And what I was looking for was if we get continuation, green candle continuation outside of the box, and don't, what I didn't want to see was another one below this. What I wanted to see was green, green, green. What I didn't want to see was green and then wick up like this and then stay within the, close inside the box again, because then it's just going to get tighter. So this was my first, my first trigger to say, hey, get your finger ready, get your button ready. So we got green, we held, we kind of retested a little bit to the top of this box, actually, I just noticed. But I actually, as soon as we crossed this line, I could already see the volume coming in on this. And because we retested a little bit and we shot up past, as soon as we crossed that line, I market ordered in. And I don't usually market order in, but this one wasn't going to give me time. I knew that this, I got a double consolidation here. I knew that this wasn't going to give me time to, it wasn't going to bounce back and forth. It wasn't going to mess around with that. It was either going to go or not go. And my stop loss was actually now that I did all that, so my stop loss was the bottom of this. Once I had gotten into this, I was going to hold through the close of this candle. But then if this candle started coming back, my stop loss was going to be the bottom of this, and I'll tell you why. Because look over here, this is the contract. So I've got charts here of tickers, but this is my chart and my ladder in the contract, so that I can buy and sell right here. It's very easy. I can mark it in, mark it out, or I can set my limit orders. So this is my contract. This is a chart of my contract. This shows you where I got in at 125 right here. Right in the middle of that candle, right in the middle of that, this candle here. So I mark it in here, and the bottom of that's at 111. So with slippage, I might get out somewhere between 110, 109. These are pretty liquid contracts. So that puts me down about 13, 14% on this. So, I want my stop loss to be between 10 and 15%. So this was really an ideal place to keep my discipline and have it make sense. If it came back down here, if it came back below and got into this box again, that might be a retest, but I would rather get out and have a re-entry when it broke above this level than to try to hold it through and go back to the bottom here, because the bottom here is what, 80 cents down here, 75 cents at the bottom of that candle. I don't want to go from $125 to $75. That's a huge drop. So, because of the way that I play the breakouts, this is the safe one, especially with this, double consolidation going on here. I'd rather get out for 10 or 15%. And then if I want, if it breaks up again, if it takes a bounce off the box or whatever, or maybe consolidates and goes again, I'll just get back in. I had buying power. Again, this is about discipline. This is about process over profits. I got buying power. I can get back in. But ideal entry there, in my opinion. And I don't say that very often because I can't. But that was an ideal entry there. And it pushed. I basically was never really down after it pushed through. So we do push through, and let me tell you some other reasons down here at the bottom right why this also made sense. So this was two confirmations with two consolidations up here on the Tesla ticker. But down here, here's VIX in the middle. So I got a 5-minute, 10-minute VIX, NQ, and ES down along the bottom. These blue boxes kind of box in where my trade was, just on the bottom 5 here. So I had confirmation because VIX was breaking down from this lower trend line that it was holding, and it was coming off support that had been there from, just before pre-market, or during pre-market, just before open. So we were getting a bounce off of that, so we were coming down on VIX. The futures had basically opened. These yellow lines are the open for each of these. They basically had opened and then straddled the open the whole time, and they were both pushing off of open. So VIX was, so think about this. And they're consolidating. Their highs are getting lower and lower and lower. Their lows are staying. So VIX is breaking down right when they're at support. So VIX is at resistance and breaking down from a pattern, from this lower trend line. And VIX and ES are both breaking up off of support that they hadn't broken in a while. So it wasn't like they were straddling anymore. They had held above. NQ here is getting similar lows and lower highs. ES over here, definitely lower highs, kind of lower lows. I mean, it's kind of almost a flaggy thing here, but it's all in this chop. It's all moving sideways, so it's not really, but it definitely consolidating and then blowing up past. So great initial move. 2 ways to play this. One is a scalp, one is a hold. I was holding for the measured move because of a pattern break. So that was my trade. I could have actually traded 2 ways here. So if I was in a big account, what I would have done is I would have scalped. I'm on 0 DTEs. So I would have oversized my trade. So instead of staying at 10%, maybe I would go to 15 or 20%. And I would scalp everything above 10%. So if I got in 20%, I'd scalp half of it right at this level, or somewhere in this range, depending on momentum. And actually, let me move this. My calculation of measured move over so you can see what the candles look like. So I would scalp somewhere in here. And the reason is because this is a strong move. There's a lot of confirmation. I have a pattern to play out, but I also have a great opportunity for a scalp. So in fact, if you look here, my entry was at 125. If I would have played the top of the first candle into the whatever that, almost into 180, not even into 180, I would have gotten 160 from 125. Somewhere in there, maybe maybe 159, 158. Outstanding gain. $35 on $125. Outstanding gain there. If I would have gone for the top of the range, which it could reverse any time in here, that's $1.90. Maybe I wouldn't have waited for the top of the range, but maybe I'd get $1.80, something like that. $1.85, so $60 out of a $125 deal. Outstanding scalp. In fact, maybe what I would do is take 5% of it here, 5% of it here. If I went over by 10%, if my hold position was at 10% and I got an extra 10% for the scalp, take the first 5% here, the second 5% there, and now I'm out of my scalp for outstanding gains, and then I can hold that, and I'm playing with profits. So, that would be another good way to trade this, especially since 0 DTEs, to take advantage of that initial pop. But so let's go back to what I actually did. So I was actually watching VIX, NQ, ES, and the volume down here at the bottom was absolutely telling me the story I needed to hear. Right? I got lowering volume. I've got this candle that has the next 2 candles almost none, and then the candle I get in on has a pop, pop, pop. So 3 candles in a row get a pop. We get into this lowering volume little flag here that I hold through. Wasn't really worried about that. I don't know why. but wasn't really worried about that. And if you look at where VIX was kind of playing with that, kind of building support just below low a day. SPY and NQ were kind of at, they were coming off and kind of at spots. That didn't really bother me. We got a nice breakup, and I knew that we were going to have to get past this range. So I guess maybe one of the reasons it didn't bother me was because I knew this could be a struggle to get through. I'd love to see it pop through, close this out on the first pop, just go green, 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 and then come back and retest for another move up. But it didn't. And in fact, if I go back to Discord, this tells me when I got in. 1042, I had already been in it for a while, you can see. Small account, 180 call, trade plan on the flag breakup. Could end up at break even though. That should be though. It may need a retest that could get deep. Hoping for a push up and retest above the 180.50 level. So basically what I was saying is it didn't get through as fast as I wanted it to, as fast as I put in my trade plan that I put there in the morning of the 180.50 level, blowing through it. But basically I was saying is hopefully we can get above this and then retest the top of that range. That was at 1042. So at 1045, watching Tesla for this 3-bar play potential could also reverse for the retest. So let's go back over and see. That was at 1045. So at 1045, we were probably in this flag testing the bottom here after this really nice reversal candle, this doji and then a drop. So on the 5-minute, this looks like it's probably a reversal. So what I'm watching for is to hold this level. On the 1-minute, this is up here. So in the 1-minute, we're kind of the same thing. We're up above this level, but we just play above it, and then we come back down and retest this almost to the penny. That is almost to the penny. So 3-bar play. Let's look at the 10-minute. Unless I was looking for that candle to be a 3-bar play. Whoa, what do we end up here? Yeah, I think the 10-minute ended up being a 3-bar play right here. So this is that 1045, 1040 to 1050. So it was in here. So this is and that's a phenomenal 3-bar play. I mean, that's outstanding, right? Look at that. That's clean. Increasing volume, low volume reset, increasing volume. That is a clean trade right there. So in Discord, that's kind of what I was mentioning is watching for this 3-bar play potential. So Tesla update. May have to scalp this instead of wait. And this is at 1048, so this is only a couple minutes after that. 0 DTE getting eaten up, not getting the power move I was expecting. Market still moving sideways. So this was just before 1050. So now let's go back here and look at what I was seeing. So this is 1040 to 1050. So this is what I was saying. It was still in this consolidation. Basically saying I might just have to scalp this if I don't get the power move. 1048. So we were right in here. Yeah, we were basically in between here. Then I was saying, hey, if we don't get a breakup here soon, and a couple minutes later, it looks like we did. Literally, this was the beginning of that 3-bar play. So back to here. We have to scalp. 0 DTE getting eaten up, not getting the power move I was expecting. Market still moving sideways, even though Tesla's holding. So that's an interesting point, and that's been a theme through the whole thing. That was an additional confirmation that I had. The markets were moving sideways. They were going up a little bit, down a little bit, And when they would go up a little bit, Tesla would go up a lot. And when they would go down a little bit, Tesla would go down a little bit less. So that's another indication. So every trade that I get in doesn't actually track the market. But if it doesn't, it has to make sense. So if I'm in puts and the market is holding or moving up, then my ticker has to be going down more every time the market goes down and up less every time the market goes up. Otherwise, it's just going to move sideways, or it's either got to track the market or take advantage of the market. Like in this case, I was more green and less red than the general market, so it was in my advantage. But that's what I was saying. If Tesla doesn't basically maintain this, then I'm gonna have to scalp this. 10:53, 5-minute, getting a pop, looking for continuation in the volume. So now that's the beginning of that 10-minute 3-bar play that ended up hitting up to 182. So in here, actually, I show my stop loss and my target price. 1 minute later, 40 cents from my TP on Tesla. And then my final close for 100% of the small account. Pushed quick above my measured move. Target price, again, only one contract. Fantastic price action. May need to do a video on this. And I knew then I'd been looking at so many things, and there was so much, well, even here, a great interaction between Tesla, VIX, NQES, but Tesla didn't track the market. So that's pretty much why, just to demonstrate that whole thing of how many things I was looking at, and what all was going on in this, the different volume, what the volume was telling me, where the breakup point was, where the retest was. I mean, this is the BB system to a T, right? Volume tells you direction. Volume has to precede your move. We're pushing levels, we're holding levels, we've got emerging levels, we've got support and resistance. This is literally everything I've been working on over the last year and a half, all kind of bundled up into one trade. So that's another reason why I wanted to do the video, because it really, for anybody who's interested in the BB system, it absolutely is the foundation for why I was able to make this trade and hold through for my measured move. Or if it wouldn't have worked out, at least I would have known at each step in the way when to get out, including on my entry. So yeah, that's kind of summary of the trade. Actually, let me look at everything else I put in here and make sure I covered everything, because this, like I said, this did have a whole lot in it. Yeah, I got my volume here. My volume's telling me I'm pushing. This was a great volume pop here. And the other good thing about when my exit, my target price was with momentum. So it's interesting. So I used to want to maximize. So I used to set my target price for the absolute highest that I thought I was going to get. And then I started just doing it like a penny lower, a couple pennies lower. Earlier in the day on Friday, I think it was on Tesla even, I had done a scalp, and I missed it by a penny. And if I'd hit that penny, I would have closed out at like 76%. And instead, it missed it, and it absolutely reversed down very quickly, and I got it at 40%. So dollar amount didn't matter that much, but it was an unnecessary loss in my view. And when I say loss, it's not like I really lost that money, but I kind of did, because I had a bad trade plan. I was trying to get one extra penny, and instead I lost. I lost, from 75% to 40%. So in that sense, it was a bad move. So it feels so much better to close into momentum, even though I was going to lose. If you look at this trade, it went from, where did I get in here? I got out at 250. I got in at 125. I got out at 250, and it went as high as, 3 at the 182 level there. It was in the 296 to 3 range. So let's say I would have gotten $3 instead of 250. That's 50 extra dollars. Not going to make or break me, literally. And it's not worth having it reverse and me get $2 instead of 250 if it reverses quickly and I chase it down. It's not worth that. So it just feels like a better trade. I'd rather have the entry ideal and the exit reasonable than to miss the entry. And this is what to me makes this such a good trade for me. This is a really good trade for me. In terms of the entry was ideal. I was never really upside down. I was never really red on this. I had a tight stop loss and it kept it. This is absolutely an ideal trade for me. But let me see what else. I don't think I missed anything. Like I say, there were so many moving parts here, and if you can see, up here I even mark up my contracts. I mark consolidations and stuff on there too. So yeah, I think that's it. Hopefully you got something from this. Hopefully you sped the speed up. You turned the playback speed up, because I know this is very long. But I do these in-depth reviews. I've been doing these for about 8 or 9 months, maybe. I don't know. Maybe I'd have to go back and look, maybe longer. And started doing videos a couple months ago and posting them. And it's good for me to do all these in-depth reviews. This is how in-depth my reviews usually are. I just don't usually explain them and articulate them and do videos on them. But I might start doing that, because I've actually found that I learn a lot more by having to explain it out loud rather than just letting it roll around in my head when I do it. So I might do it more, but definitely, if you got something out of this, if you learned it, if you want to see more, hit a like, leave me a comment or something, just to let me know. So that's my trade, and hopefully you learned something. And I guess until the next time, we'll see you.